Hi, everybody. It's Dr. Robinson. This is the May 20th, 2023 meeting of the Money Masters Investment Club. Today's meeting is going to be very short, to the point, just a couple of things to share. So without further ado, let's kind of get to it. The week we had last week was both awful and terrific at the same time. I had a Monday and Tuesday, folks, that you wouldn't believe. I was down at one point $300,000 between the 2 days. Got most of it, in fact, got all of it back on Wednesday, Thursday, Friday. So Monday and Tuesday, we had a terrible time, just couldn't find the trend. The market was relatively slow, but still, that's no excuse for not being able to find the trend. We should have been able to either find a short trend or a long trend, and I just couldn't get on the right side of the trend. So Monday and Tuesday of last week, we did awful. Thursday, Friday, and Saturday, or I'm sorry, Wednesday, Thursday, Friday, we did terrific. We got back everything we lost. So the downside here is at the end of the week, we're up a nickel. So we started the week at 25.81. We gained 5 cents. So we ended the week at 25.86. So nothing to write home about, but I got to tell you, from my perspective, folks, it was a wild week. I think I finally figured out what I've been doing wrong here in the morning trades. It's been the morning trades for the last 2 or 3 weeks that have been tough. And I've kind of addressed that issue. So I don't expect to have those problems going forward. So hopefully we'll start getting back to some really good gains over the next several months as we get into the summer months. Trading, as you know, goes down a little bit or slows down a lot during the summer months where people go on vacations and stuff and kids are out of school. So there's not as many traders in the market. But last year it didn't have too much an effect on us. We did pretty well during the summer months, so I expect to do well this month as well. I'm also hoping to get some relief from the debt crisis stuff, the silliness that's going on out of Congress and between the Congress and the president. That has really dampened market movement. The traders are starting to come back. I told you last week in the meeting that traders had kind of fled a little bit because they're concerned about what's going on. Nobody wants to take a position without knowing what the deal is going to be, whether they're going to cut back on spending or whether it's going to be a raise the debt limit with no cuts in spending and all that sort of thing. So traders are kind of taking a cautious approach. I will say that the market did spike on Wednesday, especially the news came out originally around noontime. I think it was 11 o'clock or something, but somewhere around 11ish, between 11 and 12, the president got on the television and the market spiked on that. I think as a result of the idea that some people thought that there must be a deal ready. If the president's going to do an interview or go before the nation during the day, it must have been important. It turns out that there wasn't a deal. He was just letting everybody know that he was still going to take his trip to Japan, which I think was a mistake. He should have been here dealing with this debt issue. But he did say that he was optimistic that a deal was going to get done. So the market spiked up when he originally came on. It spiked back down when they realized that it was kind of a false alarm. But it was a turning point in the market. The market right after that started heading up. And I think the optimism has become higher that we're getting closer and closer to a deal. Of course, on Friday of this week, we found out the deal. The Republicans walked out of the meeting, and we're no closer to a deal now than we were when we first started. So the market sold off a little bit on Friday, not much, but Wednesday, Thursday, and Friday, we were right on top of it. So we had a really good 3 days. It's just unfortunately those really 3 good days only offset the losses we had on Monday and Tuesday. So I apologize for that. It's my fault. It was just one of those things where we got caught in a trade we couldn't get out of on Monday and Tuesday, and but we did solve the problem the rest of the week. So the gain or the loss percentage this week is a big flat 0. So we did earn a nickel, but the good news is we're on top of it now, I think, and I think we know now how to trade both the morning and the afternoon sessions based on the way things have been going with the volatility, where it is and where the VIX is at and all that sort of thing. So overall, I think it was a successful week. I was pretty depressed on Tuesday after having 2 disastrous days. But Wednesday came along and we finally figured it out. I spent all night doing charts on Tuesday. going through it and trying to figure out what the heck the charts were doing wrong or what I was doing wrong. We changed some settings, and we're back on top of things now. So Wednesday, Thursday, Friday were really good. If we could just put together 3 days like that next week with no Mondays and Tuesdays next week, we'll be in pretty good shape. So other than that, guys, the only other thing I wanted to mention was next week is the live meeting. We do the live meeting every Saturday or the last Saturday of every month. I've been asked this time to do a little bit of a treatise, if you will, or a primer on gold. So I think it's a good idea. I've had a couple of people talk to me about gold lately, so I thought it would be a good time to talk about the potential gold as or potential for gold to be a hedge against inflation. We'll also talk a little bit about what happens if the dollar is no longer the global reserve currency. There was a couple of other countries, by the way, over the last month or so that are no longer using the dollar as the world's reserve currency. Now, I've been telling people for years that I thought that this was going to happen, but I thought it was going to happen towards the end of my life. I didn't think it would happen while I'm in my 60s. I thought it would happen maybe when I was in my 80s or 90s, and I frankly don't expect to be around that long. So at the end of the day, I'm not sure if things are speeding up or if people are becoming more distrustful or if the Chinese are being more influential, which I think the latter is the best. But we'll talk about what happens if the dollar is no longer the world's reserve currency, because that's becoming more and more evident. About 30% of countries in the world right now, by the way, this is kind of unusual. 30% of the world countries do not use the dollar as the world's reserve currency anymore. They don't buy oil in dollars. They don't buy gold in dollars. Now, it doesn't mean that they're using necessarily the Chinese yuan or the yuan, but that's a good one. But some people are doing things in the euro. So there's a couple of other countries out there, and India is kind of doing some things on their own. So there are some countries out there doing their own thing a little bit. But we'll talk about that. We'll also talk about the fungibility of gold, whether gold is fungible. Gold is considered a fungible instrument, so we'll talk about fungibility and what it means to be fungible. And then, of course, we'll talk about gold as an investment. So get your questions ready for next week. So hopefully you can have those questions ready for me, and we'll see you next week. Other than that, have a good week, guys.